Good afternoon, everyone. On behalf of Karnataka State Chartered Accountant Association, I extend a warm welcome to all of you for today's webinar on GSTR 9 and 9C, Practical Insights, its Amendments and Reporting Accuracy. So as we move closer to the annual GST compliance cycle, clarity and accuracy in GSTR 9 and 9C have become more critical than ever. So this session is designed to help professionals navigate common challenges, understand key amendments, and also to ensure correct reporting. We are delighted to have with us our esteemed speaker, CA Deepak Kothari, who will take us through GSTR 9. And there's one more session tomorrow. We'll be handling GSTR 9C. That is our speaker, CA Vinay Karthik, who will guide us on GSTR 9C, which will be tomorrow, the same timings, 3 to 5 p.m. Thank you both for accepting our invitation and for sharing your expertise with KSCAA fraternity. I also extend a warm welcome to all the members and participants who have joined us today. We appreciate your enthusiastic response. So for our non-KSCAA members who joined us today, we encourage you to consider registering for KSCAA lifetime membership. As a member, you can gain access to exclusive webinars, events, residential refresher course, or monthly news bulletins, as well as sports and cultural family events and more. We'll be delighted to have you as part of our KSCAA community. We welcome our secretary, Siddartha Javali, sir, who is also present in this webinar. Sir, we request you to welcome the speaker and the participants. I think is not able to join. We'll further continue. With that, I also now request Shreya Reddy to kindly introduce your speaker. Thank you.
Thank you, Harsha. GSTR 9, the hot topic of this season. So, for today's session, we have a distinguished professional who is both a chartered accountant as well as a company secretary, having an experience of over 15 years, guiding his clients in various industries in business setup, indirect tax compliance, advisory, and regulatory. He is also a faculty member at the institute, at our institute. He is also authored a book in taxation on online gaming industry. So with that, we would like to please help me in welcoming the speaker for today, CA Deepak Kothari. Sir, we are extremely delighted and honored to have you for today's meeting. I would hand over the stage to you, sir. The virtual stage is yours.
Thank you, Ms. Shreya, and thank you, Harsha, for your kind words and very nice introduction. I am really thankful to the Karnataka State Chartered Accountants Association for giving me the opportunity to present something on a topic which is so very important. And it's really honor for me that you have considered me as a speaker for this topic. So, been associated with KSCA for so many years, and the the association has been doing a lot of things. Started with residential courses and a lot of good speakers in terms of knowledge enhancement. So this definitely this topic for today and the forum today will be well enriched, or they're all kind of well aware of this, but as we are aware that we can see a combination of lot of members who may be practitioners in direct tax, practitioners in other laws. So they will also have clients for whom they will have to file annual returns. And this is not a new topic which we'll be discussing. Annual returns we've been filing since GST is come into inception. But every year we face the same challenge that is my returns correct? Is my returns going to get the scrutiny of the officer when he calls out for audit? Is he going to give me a clean sheet that yes, your return is a perfect return? Is that anyways possible? That's the bigger question. So I wouldn't say any return is a correct return or a wrong return. It is a interpretation of your stand, what you're taking, right? Like we have the monthly returns also. Like my mentor always says that can anyone tell that you've been filing monthly returns for so many months? Are you been, can anyone tell that you have filed the correct returns? There are a lot of interpretations which come up like, should I disclose exempted turnover? Should I disclose non-supply? In the monthly returns itself, when you have challenge, accumulating it and accumulating it and putting it in a annual return, you'll have further challenges to face. So in spite of this annual returns being filed for so many years, we still face that, okay, the interpretation what I had taken last year, the same interpretation I may not be able to take this year. Or I can improvise from the interpretation what I had taken to the current interpretation. So every year it's a kind of evolution. You're moving towards a phase wherein the mistakes what you have done, the wrong things what you have done, you're trying to improvise in the next year's return. So this topic is definitely helpful. Even live, even today, it is very active that when you go to your annual return for this year, you will see that, okay, there's something new which you can still do it. And luckily, this year they have made a lot of changes which are relevant from a reporting perspective, because every year we see there is a difference in the input tax reporting what I do because of something which I was not supposed to report, but the form is forcing me to report. And due to the system of the form, there is a difference which is throwing up. So the government has realized that, and they have made additional columns in these returns, which will help us to, fade away those mistakes so that we know that clearly. Otherwise, what we would have done is we would have just kept a reconciliation, and we'll be prepared that when the officer asks for the differences, we will be able to substantiate it. But now I think mostly those backup workings or the supportings what we have will be very minimal, because whatever corrections has to be done in the returns through various suggestions, they have incorporated it. And definitely this year's return will be a transformation in terms of what we've been reporting till the last year and what we will do it now. Okay, so the objective here in today's session will be that we will discuss on the brief outline of the return. And since we will have to see the new amendments, what has been done, we will deep dive into the each table and see that what has to be reported where. A presentation in terms of the actual return vis-a-vis our interpretation is what I will try to present, sir, so that whatever tables terms we use shouldn't be bouncing up on anybody's head, that the table what is being referred will be shown to you so that you know that yes, when I see a actual return and what discussion we are doing, it should be practically suitable so that we can opt, or we know that which data has to be filled in where. So with that objective, we'll start our today's presentation. So firstly, you have
Sir, your voice is muted. I think we lost him. Sir, hello.
yes.
So we lost your connection.
Okay.
Mhm.
Is it fine now?
Yes, sir.
Okay. So we were discussing on the prerequisites for the annual return. What are the prerequisites for an annual return? So firstly, for a GSTR 9, which is an annual return, we will need to file all the monthly returns, that is the GSTR 3B and GSTR 1 for the 2024-25. If somebody is not filed any of those returns, your GSTR 9 will not get populated. Your portal will not allow you to file the returns. So definitely we know that all the returns has to be filed. If you're a quarterly filer, finish off your quarterly filing. If you're a monthly filer, finish off your monthly filing. Only then, this is for 24-25, then your annual return will be popped up. Now, what do you require? Definitely, you will require that the returns have to be filed, then the 9 gets opened up. But for filing 9, just your last year's return, you just take it and dump it. That is not a system calculated number that, okay, it is not a consolidation of all the monthly returns which you will put it over here. You will have to definitely need that. And you will also need the returns from April to October 25. Why is that required? The system is still allowing me to file, but we have a provision that whatever credit we can claim if we have missed out the bus, we can claim it up till the return from April to October, which is filed till 30th November, right? So just the 30th November is gone. People, we've been busy filing the pending credits which we have missed out in 24-25. Audit also has got over. So all those returns, the credits could have been claimed, and we will see that the spillover of 24-25 is available from April to October in any month. Mostly we'll see that during the audit in the September or October month's return, the credit has been accumulated. But from a standpoint of view of a correct return, you don't have to only see the 24-25, you will also have to see the April to October's returns and see what is the credit spillover which you can pull back to your annual returns. Okay. Then the similar spillover can happen from 23-24, right? So you'll have to see in the last year's working what 23-24 adjustments you said that you will consider in 24-25. That also becomes a good data for you to see that, yes, that effect, how will you nullify in this year's return? So you'll have to need 24-25's return, 25-26 filed up till November 25, and 23-24's returns, and those credits which you would have disclosed in the specific columns, which you have said that you'll claim it this year, that also has to be incorporated in the current year's return. So these are the prerequisites, and definitely financial statement, because I know the reconciliation in the financial statement versus GSTR 9 goes to GSTR 9C, but some clients might not be having the facility or might not opt for 9C because they have not crossed the threshold. So such clients or such assessees whose corrections has to be done, that also can be done in 9 itself, because you cannot say 9C is not applicable. So if there's any tax liability, I will not pay. It's not the case, right? So you will have to include it here itself. So financial statement also becomes a relevant document for filing GSTR 9. Now for 9C, we have a separate speaker speaking up tomorrow, but what are the prerequisites is what I will cover here. You will have to have a reconciliation with your 9 and the financial statements. Then validation of the GST legal positions. This is very important. Of course, GSTR 9C is not to be certified by a professional. It has to be self-certified by a client. But still, lot of emphasis is given in terms of the legal position, what is the position you have drawn. You can kind of represent it in the 9C. So keep those positions and see how do you factor it in the 9C. Then your statutory audit report also becomes one of the relevant documents, and the certification from the client itself is required. So this is the prerequisites for 9 and 9C.
So,
Now,
sir,
what do we do reporting? Yes, ma'am.
can you share the screen again because it's not visible?
Okay.
No, not so. It's not visible.
Not yet.
No, sir.
Is it visible now?
No, sir. Oh, yes, sir. No.
Okay.
Yes.
So you're discussing on the prerequisites. This is what is required for 9 and 9C. Now, reporting, what should we report? So generally we have a question that the assumption for the 9 is that your GSTR 1 and 3B is the same, right? Whatever you're reporting in 1 should be reported in your 3B. But for whatever reasons, if there's any difference, the press release dated 4th June 2019 itself said that if there is a difference in your 1 and 3B, then the values, what you mention in 3B should be reported. But ideally, there should not be any difference. If there is some difference, then you consider the values in 3B because the tax implication happens in 3B. Anyhow, the credit goes to the customer, to your client from the GSTR 1. But we have a provision which says that the tax has to be paid to the government. So 3B is becoming relevant. So we can just draw clue from this press release which says that 3B should be reported. Okay. Another important few other aspects in terms of 9 is your GSTR 9 cannot be revised. Unlike the other reports where we see that revision is possible, our GSTR 9 cannot be revised. And GSTR 9 is not allowed to be furnished after the expiry of a period of 3 years. So this provisions we have seen that your monthly returns and the annual return also cannot be filed. So there is a time limit. Earlier, there was no time limit set, but now there's a time limit that you can file any return within the due date. You can file it late, but you cannot file it beyond 3 years period. Another very important change here is that in terms of GSTR 1. So whenever reporting we do it, in the columns, what is to be mentioned in the return, we see that the reference is drawn from the GSTR 1, like your exports. The reference is given that draw the values or take the values from the GSTR 1. Whenever they mention GSTR 1, that will now include whatever amendments you have done in GSTR 1A. So in the one, whatever filing we have done, we are now able to make the amendments in the GSTR 1 through GSTR 1A. So any reference to GSTR 1 year would mean 1 plus any amendments made in the GSTR 1A. So earlier returns did not have this provision of 1A. Now from this year onwards, since 1 is being allowed to amend through 1A, in our annual returns also, when a reference is made to GSTR 1, it will mean a reference to 1 plus the amendment made in GSTR 1A. Will IMS have an impact on our annual returns? Not directly, because the acceptance or non-acceptance of IMA will all flow through your GSTR 2B. And 2B is the document which we will consider primarily. So IMS is not a primary concern. You will have to see whether you have accepted or no. And that will go to your GSTR 2B, and GSTR 2B becomes the main source for our reporting. Late filing fees, based on your turnover, you have been levied a late filing fee. So if you file a late filing fees 9 lately, and there in the tomorrow session, you'll also understand that what is the implication if you file a late fees for 9C. You may file 9 on time and 9C later on. So there's a notification which clarifies that the late filing fees for 9C will start after 9. Okay, so that will get auto populated, but we'll have to just keep this in mind that there is a late filing fees based on the turnover, and this values are considered both C and S together. Nothing that 50 per day for a turnover up to 5 crores would mean 50 plus 50. It is 25 plus 25. So it'd be 50 per day, including C and S. Now, the limits, every year we see that the limits is getting enhanced. Same year, this year also, for 24-25, up to 2 crores, GSTR 9 is exempted. So they've said not to be filed at all. But if you want to file, you can file it. There's no bar in it. But if it is exempted and if you're not filed, then it is deemed to be filed on the last date of the return. So earlier, every year, this was a exercise which the government used to do, that give a notification that your return for this year will be exempted if your turnover is up to 2 crore rupees. But now through this notification, they've said that it will be optional for every year from 24-25. So we will not see this notification coming up every year from now onwards. They've made up their mind, and they've said that yes, GSTR 9 will be optional for everybody who has a turnover up to 2 crore rupees. So if 9 is exceptional, then 9C also will not apply. And above 2 crores and up to 5 crores, GSTR 9 is mandatory. 9C is not applicable. For this, there is a no notification. It is brought in through the rule amendment in the rule itself. Rule 80 subsection subrule 3. Rule 80 subrule 3 now says that 9C is optional for a taxpayer whose turnover is between 2 and 5 crores, and above 5 crores, 9 and 9C is mandatory. Now, with that basic understanding, what can we do in a 9? We can do a lot of corrections. What we could do error of omission. If you have omitted to report any turnover, any supplies, any exports, right? You can include it in the 9. The implication will be if tax is payable, that will come in your table 9 of your GSTR 9, which will tell that, okay, there is a tax payable, you can pay it now. Okay. So any omission which you have done, we all know as chartered accountants that yes, what is error of omission, error of commission. So those corrections can be done in the 9 now. This is all mostly in terms of your outward supplies. It could be taxable, non-taxable. Both of it can be corrected here. Error of omission and error of commission is possible. Grouping errors. What is this grouping errors which is permitted now? I have disclosed it under B2C, but it should be under B2B. Now, in the 9 I can do the correction, because ultimately the supplier may not get the credit because you cannot pass on the credit to your customer through GSTR 9, but your reporting corrections can be done now. The grouping from B to C can be corrected to B to B, and you can mention it in the correct column now in your GSTR 9. Any gross and net reporting segregations wherein you have reported sales net of credit note. Now, if you want, you can disclose the gross amount and the credit note separately. That is also permitted. Then reporting of already rectified information. So return which was a error in a month, which you rectified in a subsequent month, right? You can mention that reporting because you have a separate column for the actual turnover and the amendment what you have done. So these reportings we can do. That is possible. The important aspect is what you cannot do. So what are the impossibilities in a GSTR 9? Generally, when we concluded the audits recently, lot of the clients were saying, okay, if you have found some mistake during audit, we'll correct it in the GSTR 9. So is it possible that they can avail the credit? We will tell that, no, you have not availed your credit. You need to write it off. So the question all generally comes from the accountants are that, no, we will rectify in the annual return. But that is not possible. You cannot avail fresh credit in your GSTR 9 because the mechanism to claim the credit is only your monthly return. That is the GSTR 3B returns. If you have lodged your credit, section 16 specifically says that to avail the credit, you have to file your GSTR 3B. So if you have not filed your GSTR 3B, if you want to do the correction now, that is not permissible. You had a time limit to claim it in your monthly returns. If you lost those monthly returns, you had a further time to claim it up till 30th November. Had you claimed till the returns which is filed on 30th November, that was fine. But now you cannot avail your any credit. GSTR 9 is not coming to your rescue to give you the possibility to claim any fresh credits which has been missed out. If it is gone, it is gone. Then reversal of ITC. Can you say that, okay, I had to reverse, but I've not reversed the credit. Now I will reverse it. No, that is also not possible. You cannot reverse your credit. The reversal also has to happen through your monthly returns. But if you want to say that, no, genuinely, I've made a mistake and I want to reverse it now, you can do it, provided if you're making the liability payment through DRC3 now. So you say that your credit is X, your reversal is X plus something else. You can show that now, provided the liability will trigger up and you're paying it through your DRC303. Another thing which you cannot do in your GSTR 9 is your inter-tax head corrections. Like you had to charge IGST, but you have charged CGST and SGST in your transactions. Now, can you correct it? Because we said grouping errors is permissible. The grouping errors is not from one tax head to another tax head. The grouping is between B2C and B2B, but the tax head corrections cannot be made in your 9. You cannot make this correction. You'll have to follow the procedure of section 77, wherein if you have charged the wrong head tax, you have to pay the correct tax, the correct head tax, saying you had to pay, you have already paid CGST and SGST, and during the annual returns, you realize that IGST has to be paid. You will have to pay IGST first, then claim the refund of your CGST and SGST. That is the possibility outside the return, not within this return. Now, getting into the annual returns, what are the parts of the returns? Is you have part one, you have just 6 parts to fill. Part one is your basic details, which will get auto-populated, nothing to be discussed here. Part two is your outward supplies, all your outward taxable, non-taxable, non-GST supplies, and your inward supplies on which RCM is payable. That will be covered under part 2, disclosure. Part 3 will have your basically the major table is your ITC. Part 3 is your ITC availed. What is your ITC reversed? What are you reclaiming it? And a table which gives a reconciliation of the credit flowing in your 2B with the credits what you have claimed in your 3B returns. Then part 4 is on the details of tax payable and the tax paid for 24-25. Part 5 is basically transactions. This is a spillover transactions of 24-25, which you will declare it, or you have already declared it in your 25-26 returns up till 30th November. That will come in part 5. And part 6 is on all other informations, demands, refunds, HSN summary, and late fees. This is going to be a little kind of thing, but we are prepared for the HSN summary outward supplies from last year, so not to worry much about it. Now, if we talk on the various part tables in the annual return, you have table 4, table 5. Within the parts, you have various tables. Table 4 is telling the transaction where GST is payable, right? On your advances also, you have to pay GST, correct? When you have received advance against services, we have to pay the GST. So on advances, which is not adjusted with the invoice. You have got the advance, but you have not raised the invoice in 24-25. That will get reported. And your outward supplies, that is all your sales invoice will get reported in table 4, and your inward supplies on which RCM is payable also will come in table 4. Table 5 is on all the outward supplies, but on which tax is not payable. Your zero rated supplies, supplies to SEZ, exempt, nil rated will come in table 5. Table 6 will talk about ITC availed. Whatever is the ITC availed in your GSTR 3B, you're going to give a breakup of that GSTR 3B credits, what you have claimed. Table 7 is your reversals. We claimed and we have reversed it. The reversal will come in table 7. Table 8 is a kind of reconciliation which flows from table 6, whatever ITC you have claimed in your 3B, and a comparison of that with the GSTR 2B. That will come in table 8. Table 9 talks about the what is the tax payable and what is tax paid. So in the monthly returns, now we have seen that there is something called as a negative liability also, wherein liability was payable, but your credits were more, your reversals were more. So it allowed you to show up a negative liability. How do we report that in table 9 will be very interesting to see that. Table 10 and 11 is your outward supplies, which is reported in the subsequent year. Table 12 and 13 is ITC of the 23, 20, 24, 25, which you have claimed in the 25, 26 returns. Table 14 is a summation or a kind of culmination of table 10, 11, 12, 13's differential, what we'll pay in table 14. And table 15 to 19 is other information relating to your refunds and demands. Luckily, even for this year, these table from table 15, 16, 17 are optional. So we don't have to bother much about it. Now, when we start with outward supplies, that is table 4, what do we do it? We report the outward supplies in a monthly GSTR 3B returns. So you take those table from GSTR 3B and report it in this table 4. This will have a implication directly on the tax amount because you will disclose the sales, what you have made, the supplies, whatever outward supplies you have made, and your reverse charge. And the tax payable on this will go and sit in our table 9. So tax payable in table 9 is to be picked from table 4 and it can be edited. The reason why addition is possible in 9 is only for the reason that you have a negative liability reporting. So in any month, if we have negative liability reported, what values will the table 9 pick up? So they have said in the FAQ, they have clarified that in any month, if there is a negative liability, the value will be picked up as nil. So in the month of May 24, if I have a negative liability, the culmination of the 12 months will not be the negative value, it will be 0. So then you will have to see what is your actual liability and adjust it. That's the reason the tax payable is still editable in table 9. Then GSTR 3B for April 25 to October 25, which I had said you have to keep it handy before filing the returns, will be included in your table 10 and 14. Table 10 will be your outward supplies, which is for 24-25. Your reporting in April to October 25 will come in table 10. And your ITC, which you have not claimed you are eligible to claim, but you have not claimed in 24-25 will be reported again in table 14. And the taxes not paid will be same table 4 and 9, and whatever is payable will be coming in the DRC 03. So you will have two columns. One is total tax payable and the tax paid. The tax paid is not editable because the taxes what has been paid in the monthly returns that will flow into the table 9, and there will be a column which says what is the difference between tax payable and paid. That will be a column which will be shown as payable, and once you have a DRC3 payment, then that will show that okay, this is the liability which we have paid through the DRC3 challan. Now, when you say table on ITC, you have three tables on ITC. Generally, there is a confusion that when I've already reported in 6, why should I report it in 8? So 6 is only the ITC what you have availed. So in the table 6, what do we give the details of? We give the details of ITC which I've claimed already in the return, and I'm giving a breakdown of it. That is table 6. And table 7 is the details of the reversals. So whatever ITC I've claimed, I have to reverse it, right? Some examples could be that I have not made payment to the vendors within the time limit. What does the law say the time limit? 6 months. So if I have not made the payment within 6 months, then I have to reverse it. That reversal will come in table 7. And there could be other reversals. That is, credit has accumulated in my monthly returns. Now we have a new mechanism of filing the returns, right? From 2022, we have seen that the notification has come and it's clarified that you have to claim the total credit, what is there in your GSTR 2B, right? And reverse whatever credit is ineligible or a credit not pertaining to you. So all that reversal will come in table 7, either as a permanent reversal or a temporary reversal. Those things will come in our table 7. Table 8 is kindly distinguished from table 6 and 7. Table 6 and 7 at least is a flow from your GSTR 3B, but table 7 is flowing from the GSTR 3B comparing with the credit what is showing up in our GSTR 2B. So kind of comparison saying that 2B you have a credit of 1 lakh rupees. In your monthly returns, you have claimed 80,000 rupees. So 20,000 is to be written off or waived off. So that implication is coming up in table 8. This table, I think we'll come back to this after we understand the tables in detail. So individual table-wise analysis, if we do, then we'll have a proper understanding and where what is to be reported. So what I've done is I've reproduced the annual returns tables on the left-hand side and then given a summary of what is to be reported so that we are in line with what is to be filled in where. So part A, first part is on the basic details that gets auto-populated. Second part is on your details of your outward supplies. In the second part, you have various tables starting with table 4. Table 4 says details of your advances, inward and outward supplies on which tax is payable. So when you have outward supplies on which tax is payable, that gets reported in table 4, starting with table 4A. Here you have to report supplies made to unregistered persons. So where do you get this detail? Will you get this detail in your GSTR 3B? You will not get in your GSTR 3B because GSTR 3B you will have supplies made to registered customers and unregistered customers. So both B2B and B2C gets accumulated in your GSTR 3B. So the reference table given here is to show you saying that where you can get the source of this B2B, B2C supplies is your table 5 and table 7, along with the amendments what you have done in table 9 and 10 of your GSTR 1. So this gives us a guidance saying that, okay, where should my values flow in from? Nowadays, you may have softwares, but you will have to also cross check whether the values, what is coming up in your software is correct. Because the data to the software is given by us. So whether our data is being correctly captured is what we have to be mindful on. So B2C supplies gets reported in 4A from the GSTR 1. Now, B2C supplies, when I may raise a credit note or debit note. Should I report it before credit note or debit note? No. B2C supplies has to be net of credit notes and debit notes. Okay. Only for B2C you have to do this is you have to report net of credit notes and debit notes. B2B supplies, that is transactions to registered persons, intrastate and interstate both, gets reported in B2B. So B2B will be supplies made to registered person. This will have gross values to be reported. Now, the status, some tables are mandatory, some are optional. So this column I've added on the status is to give you clarification whether this is mandatory or this can be skipped. Now, these columns, when I say it is mandatory, you have to specifically fill in. Now, the value for our B2B supplies comes from table 4A and 4C of GSTR 1. This has to be gross reported. This you cannot net it off with your credit note and debit notes. So where do we report the credit notes and debit notes? After this table, you have continuation. After 4H, we will go through those tables wherein we will mention whatever is to be reported will be below this. That is in table 4I and 4J. We will report the credit notes and debit notes, whatever are being raised for tables 4B to 4E. Now, what is 4B? B2B supplies. 4C is your exports. Now, exports are zero rated. Then why is this column coming here? Because you may have an option, you always have an option of export with payment of tax. If you've opted for that option, then you will report it here. Otherwise, generally your exports are without taxes, that will come reported in table 5. So exports with payment of tax comes here. Supplies to SEZ, also you have an option on payment of tax. So supply of SEZ on payment of tax comes in 4D. Then 4E is a deemed exports column, which will get reported here. So 4A, B2C net of credit note and debit note. 4B to 4E is gross values, which will get reported here. Then 4F is advances on which tax has been made. So we are aware that on sale of goods, any advance received on sale of goods, you don't have to report it here because advance on sale of goods is not liable to tax, but advance received on supply of services is taxable at the time of receipt of advance because the time of supply and the notification number 66 gives a relaxation for supply of goods with supply of goods when advance is received, you don't have to pay. But for supply of services, we will have to pay the taxes on advance. So if I've received advance, say in the month of December 24, I will report it here. But against the advance, if I've raised a invoice in March, then I will not report it here. I will report either in 4A or 4B because the advance is adjusted. So there will not be duplication of taxes, advances which has not been adjusted. So only unadjusted advance gets reported in 4. Okay. Then inward supplies on which tax is payable on reverse charge basis. So RCM on which a recipient has to pay the taxes gets reported over here. All your inward liable for RCM gets reported in 4G. This you will not find a reference in GSTR 1 because GSTR 1 is on all your outward supplies, but you pay the reverse charge in your GSTR 3B. So you have a specific column in your GSTR 3B, table 3.1D, which says that what is the RCM which you have to pay GST under RCM. What is the value of supplies on which you have to pay RCM? That gets captured in your GSTR 3B and 3.1D. Okay. Now, new column is being added, which is 4G1, which says supplies on which e-commerce operator is required to pay tax as per section 9(5). That is, including any amendments. So, a e-commerce operator who pays taxes on behalf of the supplier, right? Not all e-commerce have to pay taxes on behalf of the supplier. There are specific list which says that what are the category of transactions. Example, our cab aggregators, our uh, restaurant aggregators. They have to pay taxes on behalf of the supplier. So they will have to report it under 4G1. That is, the aggregator will have to report it under 4G1, not the restaurant provider. For the restaurant provider who is supplying it through an aggregator, he will have to report it in a separate column. So this table 4G1 is for this aggregator who pays taxes on behalf of the supplier. Okay. And the total of this comes in 4H. Now, moving forward, we have seen outward supplies on which tax is payable. Then credit notes. Credit notes, which is for B2B supplies, which we had seen in the previous table from B to E. Credit notes gets reported under 4I. Under 4J, all the debit notes. Okay. Then any amendments which we have done through our monthly returns gets reported in 4K. And that is for a upward revision, it's coming in 4K, and downward revision is coming in 4L. This is all mandatory, and the relevant reference table is here for our easy reference. So the 4M table is a culmination of table 4H and 4M, which is total supplies on which tax is payable, including the RCM gets added up over here. So 4 is on outward supplies liable to tax. Table 5 is on outward supplies on which tax is not payable. That is, the supplies which we make and tax is not payable starts with export with payment, without payment of tax. Then SEZ supplies without payment of tax. All of this we would have reported under GSTR 1. So we can calculate or take the values from the 12 monthly returns of GSTR 1. So table 6A helps in exports without payment. Table 6B for SEZ supplies. Table 4B of GSTR 1 will help us to file the table 5C, which is supplies on which tax is to be paid by the recipient under reverse charge. So supplies on which the uh, taxable person for whom we are filing the return, he will report it on the table 4C. That is the reverse charge which he is payable. But that supplier, say a advocate if he's registered, he will also have to report his supplies. So he will report it under 4C saying that this is the supplies I've made, but the tax is payable by the recipient. So he'll only report the turnover here. So only 5 is a table where we report all the outward supplies, but tax payable will be 0 in all of these cases because tax is either not payable or paid by the recipient. So 5C is a tax which is paid by the recipient under reverse charge mechanism. 5C1 is, like we had seen, the aggregator gets reported under table 4. The supplier will have to report something. The supplier will report it under 4C1. So if a restaurant, he is supplying it through a aggregator, he will report whatever supplies is made through an aggregator under 5C1. That is, supplies on which tax is to be paid by the e-commerce operator as per section 9.5. Okay, so don't get confused here that who has to report where. The aggregator will report it under table 4, and the person supplying it through an aggregator will report it under 5C1. Okay, and we have TDS and TCS deduction made by the aggregators. Like if you sell something on an e-commerce platform which is of goods and not notified under 9.5, they will deduct TDS. That do we report it here? No. That will be like a regular supply which will report under table 4. You don't have to report it under table 5 because that's your regular supply made through an e-commerce operator. He will deduct TDS, but that's not a matter for different disclosure in 5 that will get disclosed in either it will mostly be B2B, so it will get disclosed under 4B itself. Okay. Then moving forward, we know export without payment of taxes, SEZ supplies without payment of tax, restaurant and aggregators, generally aggregators on which you have various categories. One is the cab aggregators. The cab person, if he is registered, he will disclose it under 5C, 5C1. And the supplies made by or made to urban cabs, like any plumber, if he is registered, he will report it under 5C. So the number of transactions to be reported in 5C1 or the taxable payers to be reported will be restricted to people who are registered only. Then 5D is on the exempt supplies and 5E is under the nil rated supplies. So you have two categories of supplies to be disclosed, exempted and nil rated, but these tables are mandatory, but you can club, instead of segregating between what is exempted and nil rated, we can club it and disclose it under exempt column itself. Okay, we can disclose exempt and nil under the exempted category. Non-GST supplies, that is these 5 petroleum products. These are all non-GST supplies, which you have to disclose separately under 5F. The same like the previous year, no changes in this. 5H2, 5I, 5J, and 5K. This is your credit notes, debit notes, and supplies through amendments and downward reduction through amendments will have to be reported individually in 5H or 5H to 5K. And this is optional, which means that exports with payment without payment of tax, and if I've raised any credit note, I can net it off under 5A. SEZ supplies made without payment of tax and I've issued a credit note, I can report net off in 5B. If you have individual details, you can disclose it under 5H and 5I. Otherwise, you can disclose it under 5A and 5B. But the experience says that once you disclose it under 5H and 5I, this becomes a good source for the officers to disallow the benefit of zero rated. They would say, okay, your outward supply, which you have reported in 4A, you give me the corresponding FIRCs. So exports, generally, the conditions for exports without payment of taxes that you should, the five conditions is the supplier should be India, recipient should be outside India, the taxable supply should be provided from India, and the recipient should be outside India. And the receipt should be in terms of convertible foreign exchange. So once those conditions are satisfied or no, the officer generally tends to pick up from the GSTR 9 5A column and says that you have disclosed, say, 1 crore rupees in 5A and you have disclosed the value in 5H. 1 crore reported in 5A, 10 lakhs reported in 5H. So they will not see 5H and they will tend to say that, okay, 1 crore you have reported as 5A, so you give me FIRCs for 5A, the full 1 crore rupee. But you will always have a justification saying that I have disclosed correctly 1 crore and the credit note of 10 lakhs. So I am justified to give you a justification for only 90 lakh rupees. But the officers don't agree to it. So a good approach would be that since you have optional columns, we better report the net of values in 5A. Okay. Of course, you will have your own experience, but my experience is that when I report it under 5A and report zero in 5H, then there are no questions asked. They will ask for FIRCs for 90 lakhs and I give them the supporting FIRCs for 90 lakhs. The matter is closed. Okay. Since the tables are optional, it is our choice, but I would recommend that we opt for it and report the net values in 5A to 5F. Next, going to ITC column. So your 4 and 5 were all on your outward supplies. Now we are coming to ITC columns, that is the input tax credit. 6A says that the amount of input tax credit which is availed through GSTR 3B. So this will automatically flow in because we have already filed the returns and we have said that the prerequisite for filing the returns GSTR 9 is all the monthly returns should have been filed. Correct. So since all the monthly returns has been filed, we have lodged our credit. That is the claiming of credit has happened in GSTR 3B. So in the GSTR 3B, we have total 4A column. 4A is again split into 1, 2, 3, 4, 5. The cumulative of all of that will come in over here. The total credit, what we have claimed in GSTR 3B will automatically come in table 6A. Now, once it is come in table 6A, you have to give a bifurcation of this. So how do we give a bifurcation? We give it in firstly, 6A1 is an additional column here. So out of the total credits, what credits we are claiming now? We had discussed that we can claim the credits from the previous year to this year. Like 23-24's credit, we can claim it up till October 24. Correct? In the October 24, input tax credit, what I'm claiming in the GSTR 3B, you can find that previous credits also are flowing in. Since previous credits are flowing in, I have to exclude them. So this column is for that. 6A1 is ITC of preceding financial year, which is availed in this financial year and which is included in 6A. Why is it included in 6A? Because in my GSTR 3B, I've claimed the credit other than the ITC claimed under Rule 37 and Rule 37A. Now, what is this Rule 37 and Rule 37A? Rule 37 says that if you do not make payment to the vendors within 180 days, you have to reverse it. Now, once you reverse it, then your credit is reducing and you can reclaim it once you make the payment. So any credit which is reclaimed, the 6A1 says that you should not report it under 6A1. Clear? So I have 24. So what they're trying to say is ITC of preceding financial year, which I've claimed. So Last year, 23-24, I have not made payment to the vendor. I have reversed it. Now I'm reclaiming it. Should I report it under 6A1? No. I should not report it under 6A1 because the form itself specifically says that reclaimed other than Rule 37 and 37A. So what should I mention in 6A1 will be, say, a supplier has raised an invoice on the March 25th. March 2024, he has raised the invoice. You have received the goods on 1st of April 24. Okay. So one of the conditions to claim the credit is you should be in actual receipt of goods. So you have not received the goods in 23-24, you're receiving in 24-25. So in April month's GSTR 3B, you have claimed it. Since you have claimed in the monthly return of GSTR 3B, it will flow in your GSTR in this table 6A, correct? Now, such credit you have to include it in 6A1 so that it gets excluded because this is not a credit of this year. The invoice is dated March 24, but following the procedure of section 16, you have claimed it in 24-25. But this is not in true spirit credit of this year. This is credit of last year. Correct? So that gets excluded over here. So 6A1 is a ITC in respect of 23-24, but which is availed through GSTR 3B of April to October 25, which is of course filed till 30th November and included in auto-populated column in 6A should be declared here. And any ITC which is claimed and reversed and reclaimed shall not be reported here, which means that 180 days criteria, which I had said, that which we had reversed last year and we are claiming it this year because we have made the payment to the vendor this year, should get reported under 6H. So we have two important columns for reporting the ITC claimed, 6A1 and 6H. 6H, we will include those credits which we are reclaiming for non-payment to the vendors within 180 days. And 37A is a provision which says that if the supplier has not filed the returns, if he's not filed his GSTR 3B, you have to reverse your credit. And once he files it, you have to claim it back. So 23-24, you have seen that 2 vendors out of your 100 vendors have not filed the return on time. They have not filed the return GSTR 3B. So you have reversed the credit. And on your follow-up, they have filed the return. Reclaim which is happening other than Rule 37 and 37A. Okay, that is 6A1. So from 6A, if the 6A1 goes off, so what are we left with? 6A2, which is the net ITC in truly the ITC for the current year. Okay. Now for this 6A2, we are giving a breakup from 6B onwards. So 6A2 is your pure credit for this year because you have excluded the credit of the previous year. Current year's credit you have in 6A2. Then 6B is your inward supplies. Your inward supplies on which what is your ITC? On that, you have 3 categories reverse charge also. So you exclude that reverse charge. You have a separate column for that. Inward supplies, other than imports and inward supplies liable to RCM, but include services received from SEZ. So all your imports and RCM credits, you will not include it in 6B. Pure purchases, you will include it. Again, bifurcate this as inputs, capital goods, and input services. This is also a mandatory column. However, inputs and input services, if you do not have a bifurcation, you can club it with the inputs itself. Okay, so there's no harm in disclosing inputs and input services here. If you have categorization of what is your input services and inputs, good. If not, you can club inputs and input services together. This applies for 6B, 6C, and 6D, all the 3 columns. So all our 6B will be our inward supplies. 6C will be inward supplies received from unregistered person, which is liable to reverse charge. That is, the supplier is unregistered and you have paid the reverse charge. That will come under 6C. 6D will be your inward supplies received from registered supplier, still liable to reverse charge. There's no restriction for a supplier who is who is not liable to tax to take registration. So he may take a registration like an advocate. An advocate is not liable to pay tax on his turnover. but he is not precluded that he cannot take registration. He can take a registration and he can disclose that my supplies are liable to reverse charge. So if you're buying from such registered person, you have to pay reverse charge, but the disclosure will be under 6D, unlike 6C, which is from a supplier who is not registered. So your 6B, 6C, 6D is all your inward supplies. Then comes to goods imported. So your 6A, again recapturing this, 6A is your total credit, which is there in 3B. You're excluding the credit of the previous year, which is included in your 3B. Then you come and give a bifurcation of this in your 6B, 6C, and 6B. That is the first column. Then 6E is the goods imported. What is the import of goods you have done for the year on which you have paid the reverse charge? That is coming in 6E. Again, disclosed in your 4A1 column of Form GSTR 3B. So, as I said, 4A is divided into 5 columns, 5 sub-columns. 4A1 gives us the goods imported. 4A2 says the reverse charge which we have paid on import of services. That we will report in 6F. Then ISD credits will get reported under 6G. And 6H, this is the column which we are referring under 6A1. This is a column. There's a alteration or kind of correction here which says that amount of ITC claimed under the provisions of the Act. This we will have to reclaim only due to Rule 37 and 37A alone will come here. Other reclaim credits will go to 6A1. So we will try to understand this much in detail when we go to the case studies on specifically. I have case studies on input tax credit saying that what type of ITC credit I have and where I will report it. Should I report it under 6A1 or should I report it under 6H? The importance of 6H is that any credit which I'm reclaiming, it will be equivalent to a fresh credit. So I don't have to report it under 6A1. If I report it under 6A1, it means it's a previous year's credit which I'm claiming now. But when I'm reclaiming any credit for the purpose of Rule 37 and 37A, it is like claiming a fresh credit. So that will come under 6H. And 6J, ideally it should be 0 because it's a total of the 6B, that is a credit what I've claimed in my 3B returns. From that, I'm reducing the breakup of the credits. So when I'm giving a breakup of the total credit, the 6J, 6I column should ideally be 0 because as we had already set the ground rules that GSTR 9 is not a place for me to claim fresh credit. In my GSTR 3B, I've missed out some credit. Can I report it under 6C to 6E and now I can claim it? I cannot. So ideally, in the ideal situation, our 6B minus 6H, that is coming in 6I, should be 0. The difference is coming in I to 6J. Then the transitional credit, which is their claim through Tran 1 or Tran 2, which we had claimed it in the initial years. Ideally, now it should be 0, except in some exceptional circumstances when the court has allowed you to file Tran 1 and Tran credit now. Then this 6J will have some value in it. Otherwise, it will be a 0 value. 6K to L is mostly not relevant. That is on the transition credit. 6J should be 0 and 6K and L also will be 0. 6M is your ITC availed through ITC 01, 02 or 02A. That is in case of any mergers or any case of transfer of credit from one entity to another entity, that we will report it under 6M. Okay. So the total of your credits availed will be as I plus N, which is in your 6O. So our total ITC availed, whatever we have availed in the current year, in our GSTR 3B will appear in our 6. So what is the relevance of the total credit? This credit will flow through to our GSTR 9C. And then you have a reconciliation there in the terms of the credit, what you have availed in your financial statements, you have what credit you have claimed in your books of returns vis-a-vis the returns credit, what you're reporting in your GSTR 9. Okay, so we have claimed the credits in 6. Now we go to reversal of it in table 7. Table 7 is the details of our ITC reversed. Here you have the breakup rule wise. Rule 37, Rule 37A is an addition. So each category wise, we'll have to give a bifurcation of the reversal. Because in our GSTR 3B, for all of this, we have only one column called as table 4B. Okay. In our 4B, we have temporary reversal, permanent reversal. We will have to have workings from our monthly return workings and give the bifurcation here. What is my reversal due to Rule 37? What is my reversal due to 37A? Each category wise, I have to give a breakup here. 37, 37A, I've explained. 38 and 39 is for banking companies. Rule 42 is a claim, restricted credit when I have common input for my common credits, which has been claimed for my taxable and non-taxable supplies. So proportionate credit reversal comes in Rule 42. For the capital goods reversal, it comes under Rule 43. And we know the block credit, that is credit which is not permitted at all, even if you're using for your business, that credit comes under section 17.5. So it's a permanent reversal, which we would have done under 4B1, that gets reported under section 17.5. Then any Tran 1 and Tran 2 reversals get reversed under 4F and 4G and other reversals. Now, what could be the other reversals when all the rules have been specified? There, the example which I had given you under 6A1, I have purchased the goods, but the goods have not reached me, correct? But it is appearing in my GSTR 2B. The circular now says that I have to claim the credit what is appearing in my GSTR 2B. So it was appearing in my March, so I've claimed it in my table GSTR 3B. Now I have to reverse it, so I have reversed it. Such credit which is not in relation to such specific rules, that is goods not received cases, will get reported under H, and any other reversal also I can report it under H, because H when in the portal allows you to give specific reasons and claim it. So H will become H1, H2, H3 and so on. So all other reversal apart from this rules, we will report it under 7H. Then the total of this is the total ITC reversed, and the net ITC available for utilization will be the total 6O, which is the credit which you have seen here, total ITC availed minus our reversal is the net ITC which is available to me. Okay, so I'm giving under 6 and 7 a breakup of the credit what I've claimed and the reversals what I've done. Coming to table 8, as I said, 6 and 7 is from the GSTR 3B. Now, table 8 is a reconciliation of credit what is appearing in my GSTR 2B and comparing it with the credits what I've claimed. So, to start off, the total ITC as per GSTR 2B will flow in here. Now, 8A is a column which is a culmination, a total of my 12 months of GSTR 2B. I will consider the table 2B values which is there in table 3.1 of the GSTR 2B. Right now, should I download all the 12 months GSTR 2B and consolidate it here? No, you don't have to. You have to take the table which is there in your GST returns itself. It's a auto populate table, and you have an Excel sheet, right? Before filing the returns, you have Excel workings of the values which is flowing in your GSTR 8A. In your uh, GSTR 9, you have an option to download table 8A. Okay, so when you have an option, you will see that whatever is the credits which is flowing in your 8A is coming from that Excel. Now, the interesting part here is the FAQ clearly says that your 8A values online and your 8A values in Excel is tend to be different. The reason why it will be different is that any reporting which is happened by the supplier and in the subsequent year, right? If within the timeline of November, but he's mentioned the invoice of 24-25, that will come in over here. So in the online, you will see that in the online, you will have values of the ITC, which is claimable. But in the Excel, you have different columns. One is invoice reported, one is invoice reported and amended. Any invoices reported through GSTR 1A, any credit note, debit notes, they have a separate columns. So that is the reason there will be a difference between the Excel and this. But the Excel will definitely help us to understand which supplier's credit we are claiming. So the Excel will help us to kind of reconcile or kind of follow up with the vendors who have not reported in their GSTR 1. So the total credits we would have done the exercise already in our monthly returns. This will be a rechecking of those vendors who have not given the credit. Okay, so 8A is getting auto-populated from GSTR 2B, sorry. From 8A, there'll be a comparison of the credits what we have already claimed in the returns. So in the monthly GSTR 3B returns, you have the returns which is flowing in your 6A1. From 6A1, you are reducing the credits of previous year, gets reduced as 6A2. Then the balance is your 6B. So the values from 6B, whatever is filled in the above columns will come in over here. So data from the credit claim in 3B for the first time is coming over here. Reclaim doesn't come here because reclaim credit is a separate table which we are not including it in 6A1 at all. Okay, so only the first time credit flows in over here. The difference of this, before getting into the difference, ITC of inward supplies, which is received during the financial year but availed in next financial year, like how we had previous credits coming in this year was got excluded under 6A1. Similarly, credits which is appearing in my GSTR 2B for this year, which I will claim next year, that has to get excluded. So credit available in 2B, but which is claimed in the next year, I am reducing that from my total credit appearing in my GSTR 2B. Total credit in 2B, I am comparing it with 6B and removing the credit which I will claim next year. So that gives a realistic comparison. So is there any difference? Yes, there can be any difference. If 8D is different, most of the cases you'll find that there's a difference. But of course, with the new reporting, this should not happen. But rightly or wrongly, we are not following the system in its proper essence. So there will be a difference in 8D. If there is any difference in 8D, then that has to be either ITC which is available, not availed, or which is ITC available but ineligible. So if the 8D is positive, then you will have to give a bifurcation of 8E and 8F, saying that whether the credit was available but you have not availed it, that's a mistake which you have done, or it was available but it was a ineligible credit. So because in our GSTR 2B we have total credits, eligible, ineligible, everything comes in. Now we will have to do a comparison of that with the GSTR 3B and say or give a statement here in terms of 8F wherein I'm agreeing saying that this ITC was available but it was ineligible. So our columns in 6 and 7 were different than 8. So 8, 6 and 7, if you have already shown as ineligible, that will not flow in here because the data flows in here from 6B, which is our gross input tax credit. The net is not getting captured here because in 2B also we have gross. So comparison of apple with apple has to be done here. So gross credit flowing in 2B with the gross credit reported in 3B is what comes in 8B. So the difference is either available, not availed, and available, not eligible. Then you have a reconciliation of the credits of your imports. So first is 8G, which says IGST paid on import of goods. It is not claimed. So whatever imports you have made and what is the IGST you have paid on imports will get reported under 8G. Then you have bifurcation of IGST, which is availed on import of goods. Again, flowing from your 3B, you have a separate column for GST credit on import of goods that comes under 8H. Then 8H1 is you have paid on your imports, but you have not claimed in current year, you are claiming in the future year. This is also a new addition. In this year, 8H1 is the credit which is flowing to the next year. The spillover of the imports, the credits on imports which you're claiming next year gets reported under 8G1. Then you have 8I is the difference between import IGST paid on import, claimed and claimed in the future. Again, 8I should be 0 because whatever is the credit you have paid, you will either claim it this year or claim it next year. If there is any difference lying here, which means this will also get lapsed. So your total lapse credit is 8K, which is E plus F and J. That is either you have availed, either you have not availed, or it is lapsed. The culmination of this will be 8K. So this gives a kind of comparison between our GSTR 2B and GSTR 3B, and any credit which is not claimed will all get lapsed either under 8E or 8F. Okay. Then you have next columns of from the output we have reported under 4 and 5, 6, 7, 8 we have reported the ITC. From our output minus input comes the tax payable. This is, of course, a mandatory table and bifurcated as various heads I, C, and S, and the cess, interest, late fees, and penalty. So your total tax payable will come in 9. Then whatever we have paid through cash, that is your monthly returns, whatever you have paid, that will come here. So table 9C is non-editable. You cannot edit the taxes paid through cash. If you're paying anything through DRC 3, that will not get captured here because the capture point for the paid through cash is your monthly returns. Okay. And payment which we are making in the returns through ITC will be mentioned here. So basically table 3, 4, 5, 6, and 7 are not editable because this is the adjustment or the set of what you have done in your monthly returns. Only the tax payable column is editable because we have this negative liability tables in our GSTR 3B. So what does it mean? My output is 100, my input is 120. So in my GSTR 3B, you would have minus 20 as a negative liability column. So what will capture over here, whether minus 20, the FAQs clearly says whenever there is a negative liability in any monthly returns, the capturing column here will be the positive value itself. So if it is negative, it will not capture anything. It will capture 0. So you will have to see your monthly returns and determine what is your tax payable on your outward minus inward cumulatively for the whole year. Once you capture that, then you get the total taxable value. Okay. So once you get the total taxable value or the tax payable based on your disclosure in your GSTR 9. Say I've disclosed 100 rupees of sales in my monthly returns, but I will now report as 120. So to the extent of excess reporting of 20 now, the tax payable will calculate the tax liability on the 20 because in table 4, I'm already disclosing 120. Correct. But for due to this negative liability, if the values are incorrectly getting reported, you can correct it. So tax payable column is editable. From the tax payable paid through cash or ITC, the total tax paid and the difference column. So if there is any positive difference here, which means there is a liability which you are agreeing to pay, better pay it through DRC 03. Otherwise, the officer, it becomes a ready-made serving plate for the officer saying that, okay, you yourself have disclosed that there is some tax payable and you have not paid. So you have to pay tax, interest, and penalty. But if you have paying yourself the tax and interest, at least the penalty can be saved. So if you have any difference, we will. This is a new table, the new column which is included now. But we always used to do that, right? What is tax payable and what is tax paid? If we see that there is some payable amount, we will always pay through DRC 3. So with the only fear that when our information itself is very transparent, we ourselves are declaring that a tax is payable, then why should we not pay through DRC 03, which is outside the table is being now brought in within the table now. Okay. Then table part 5 is on the reporting of the transactions reported in the next year. So supplies, the heading is particulars of transactions for the financial year declared in the next year. Supplies declared through invoices or debit note. That is outward supplies which has been declared through debit notes. Then supplies reduced through credit notes is table 11. Then table 12 is ITC of financial, which is reversed next year. So any reversal which I've done in next year will come under table 12. Table 13 is ITC of the financial year, which is availed in next financial year. So table 13 is very important column because ITC, which is availed in my return from April to October, provided I file it within November, but credit which is missed out for 24-25 will come in here. Any ITC which was reversed in any of the financial years, as per Rule 37 and 37A, but it is reclaimed here, the details of such ITC reclaim shall be furnished in table 6H and should not be filled in over here. So you have a specific column of 6H, right, which you are reclaiming. So there is a reclaim which is happening for Rule 37 and 37A. You will not report it over here because you have already claimed in this year, you have reversed it and you're claiming it next year. So I don't have to say that I will claim the credit of this year in the next year. Got it? ITC I have claimed, I've reversed it. So there ends the story. 100 rupees credit, 100 reversal, balance is 0. So I don't have to report under 13. I will only have to report it in the next year under my 6A and under 6H, saying that this is a reclaimed ITC. So 13, even though the heading, the wordings is same, the FAQs makes it amply clear that you have a column of 6H. Mention those things under 6H and not under 13. Okay, we'll see this more detail in a we will understand what should be reported in 13, what should be reported in 6A1, and what should be reported under 6A. But now we will definitely understand this, that ITC, which is other than Rule 37 and 37A, will get reported under 13. Okay. Next is on table number 14, which is whatever is the values what I've disclosed in 10, 11, 12, 13, resulting in a tax liability will come in table 14, which will show that what is my payable amount, what is the paid amount, and what is the difference if something is payable. Again, this is a mandatory table, nothing to be skipped. So what I disclosed in 9 to 12, I should see whether I have paid it in the subsequent month return, and then I will disclose this year. Table 15 is the optional table, which is the giving the details of the refunds claimed. And it says that refund claims filed in 24-25. So there is always a confusion that refund for 24-25, should I report it here? No, because refund for 24-25, I have a time limit to file it till 27. So how can I report it here? So refund claims filed in this period could be for the previous years. I can, which have filed it in this year, is what I have to report it here. Refund claimed, sanctioned, and rejected, and anything which is pending. Similarly, demand and what is the taxes I've paid for the demand and tax demand which is pending gets reported under 5E to 5G. Again, here it is suggested not to mention, because once you give it, it's an optional thing. Once you mention the details here, then you're like saying the officer saying that I have filed the refund of 21-22 in 23-24. So you're saying, okay, you yourself have disclosed it. So give me the details of 21-22. Even though the officer has been given a jurisdiction to, if he's coming with a jurisdiction to file to check your returns for 23-24, he will ask you the details of 21-22 because we disclose here. So be cautious that you need to judge yourself whether you have to report it. I would suggest not to report the columns on refunds and demands in this columns, since it's optional. Then table 16 is a bifurcation. Again, this is optional in terms of what supplies you have received from composition taxpayer and any deemed supply from a job worker's perspective, that when you have given to a job worker and not received it, that will get disclosed under 143, and any good sent on approval basis is coming under 16C. These three are optional. HSN-wise summary. So my HSN-wise summary of outward supplies is a mandatory column. I have to mention the HSN, unique quantity code, quantity, value, and the rates of taxes. In my monthly return also, this is a compulsory table, so I've filed it. So the guidelines or the portal is now saying that, okay, whatever you have filed in your monthly returns, you can download it. We have a download option in GSTR 9, wherein your monthly reporting, what you have done, will get captured and you can cross check and file it. So be cautious here that whatever values you're disclosing here, right? The total taxable value, what I'm disclosing here, should match with table 4 and 5 on my outward supplies, should match. Otherwise, again, as a open plate for the officer saying that, okay, your taxable value and HSN wise, there's a difference. So there is some tax payable. So be careful. HSN-wise summary of outward supplies. Then HSN-wise summary of inward supplies is optional. HSN-wise summary of outward supply is compulsory. To what digit goes? If your turnover for the previous year is more than 5 crores. So you don't have to see turnover for 24-25 to disclose the number of digits. Previous year's turnover you have to see for 23-24. If that is crossed 5 crores, then you have to give 6-digit level HSN code. If it is below 5 crores, then you have to give 4-digit level code in this table 17. We'll go to case studies. Then probably if there's any questions, we'll take up. Probably with these case studies, your questions will get solved. ITC of previous year. Now, while I'm filing the return for 24-25, I have seen that ITC pertaining to 23-24, I have claimed and I've reversed in 23-24. Now I'm reclaiming it in my 24-25. What could be the reason that I've not claimed or I've claimed and reversed in the previous year? That is possible that the March invoice has been raised, but I didn't receive the goods. I've received it in April. So where will I do the reporting of this? Okay. I will report it now under 6A1 because 6A1 is a column, as we had seen that credit of previous year, which is claimed in this year, this will be reported in 6A1. Okay. Now, another instance, ITC of 23-24, I have not claimed it in 23-24. In the previous example, what I did is I've claimed it and reversed it. But now I have not claimed it at all. I'm claiming it for the first time in 24-25. The reason probable could be that it is late reporting of invoice by the supplier. That is January invoice, he's reported in May 24. So where will I report this? It will again get reported in 6A1 because whether you have claimed or reversed and reclaiming it now for other than Rule 37, 37A, you will report it under 6A1. Similarly, if you have not claimed it last year, but you're claiming it fresh this year, still it gets reported under 6A1 itself. Now, ITC of 23-24, I have claimed reversed in 23-24 due to non-payment to the vendor, which means what? This is a reversal due to Rule 37. And now I'm claiming in 24-25. So will it come in 6A1? Definitely no, because we know 6A1 is for other than Rule 37 and 37A. So where will I report it? Such ITC, I will report it in 6H of the GSTR 9. So it will not come under that exclusion. So when we see that 6A1 ITC pertaining to previous year, we should not exclude all the credits of the previous year. For any credit which is being reclaimed now, even though the original invoice was for previous year, but I'm reclaiming it now due to Rule 37 and 37A, I will report it under 6H itself. Okay, so do not report it under 6A1 is a clear caution. ITC, I have claimed this year, I have reversed it this year, and have reclaimed also in this year. So where will this reporting happen? Take for instance, Mr. A has claimed rupees 100 as IGST in the month of April 24. He's reversed it the same in 24 itself due to non-receipt of goods. The same has been reclaimed in May 24 as the goods have been reached on on the 4th May 24. So reporting for 24-25 will be that you will show the original claim in 6B because you will show in the GSTR 3B the credit which is claimed. Then reversal you're doing in 7H. Why 7H, not 7A or B? Because 7A to G is for Rule 37, 37A, Rule 42, 43, and Section 75. But this is not any of them. So we will mention it under 7H itself. And then I'm reclaiming it in the month of May. which is within the year. So I will reclaim it under 6H, because 6H for the current year has to be reported. Any reclaim in the current year has to be reported under 6H. So 6H will act for two things: reclaim of the previous year, that is for Rule 37 and 37A, and reclaim in the current year for any purpose. Clear on this? That current year's reclaim will come under 6H, and we'll see in the next example that reclaim of previous year for Rule 37, only Rule 37 and 37A is coming under table 6H. Yeah, like this. Mr. A has claimed rupees 100 as credit in April 24, and he's reversed it in October 24 because he's rightly seen that he's not made payment to the vendor within 180 days. So he's reversed it in October 24, which is as per Rule 37. And he is reclaimed again when he is made payment to the vendor. He's made payment to the vendor on 4th June 25. So he has reclaimed it in June 2025. So where will the reporting of this be? The reporting will be in GSTR 9 in 24-25 and 25-26 also. So how will we report in 24-25? Original claim, I have claimed it in April, correct? So first I will report it in my 6B as credit for this year. Then I have reversed it in October. So I will reverse it as reversal in table 7A. That is Rule 37 reversals of the same value I will reverse in table 7A. Now, am I reclaiming it this year? No, I'm not reclaiming it this year, but I will reclaim it in next year. So where will I report it? I will report it in table 6H of next year. So I'll come to 3 later on, but see here that I will reclaim it in table 6H of GSTR 9 of 25-26. It will not come in 6A1 of next year because it is a reclaim for the purpose of in. So it will not get excluded from my total claim. I will under 6H, and reclaim will not be reported in 8C and 13 of 24-25 also. This has to be very clear because whenever, as I had said, that there is a cautious thing that any credit which is appearing in my 3B and I'm claiming it next year, or appearing in my 2B and I'm claiming it next year, I will report it under 8C. No, because my reclaim will not be affected here, and my comparison in 8A and 8C also will not get affected because my 8A and 6B will be correct. Why? Because in my 6B I've already reported the original claim, and in my 8A also the GSTR 2B will match. So my 2B and 6B will match. My reclaim, I don't have to report under 8C because my 8A and 8B is already matching with each other. So I will not report it in 8C. If I'm not reporting it in 8C, I will not report it in 13 also. Right? Because any reclaim is like a fresh claim. So do not report it under. Okay. So this is very important that what I report also we have to be aware. So this reclaim should not be reported in table 8C and table 13.
Hello. Hello, sir. Give us a few minutes. We'll ask sir to connect back. Yes, sir, you're visible. You're not audible. Hello. So can you please check your audio? We're not able to hear you. Dear participants, sorry for the inconvenience. We're looking into the technical issue. Until then, I think you can take some time and post your questions in the chat box. We will take it up once the session is continued. Uh, Sorry for the inconvenience. Speaker is re-logging in. Until then, you can post your questions in the chat box. We will take it up once the session continues. Thank you.
Yes, Shreya. Is it clear now?
Yes, sir. You're visible and audible.
Thanks. So it is GST, so there has to be a glitch. No problem. Fine. So we were discussing on ITC claimed, reverse reclaimed in the next year. Yeah. So what happens when I have claimed and reversed in the current year and reclaimed it in the next year? So we were saying that original claim will be in your 6B. Reversal will happen in 7A specifically, not in 7H. 7H is for other reversals. 7A is for reversals due to Rule 37. And reclaim it should not be reported in 8C and 13. The reason being, the reclaim will be reported in 6H of the next year. Okay, so this reclaim will happen in the next year under 6H. This you have to be cautious that you should not report it under 8C and 13 of the current year. Okay, so this will be questions which will be raised by officers saying that if you have not claimed it in the last year, how can I give it in the current year? So you will have to give them the FAQs and clearly mention to them saying that the reason is this is a reclaim due to Rule 37 and 37A. I should not report it under 8C and 13, so I have not reported it. Take a case where it is ITC claimed and reversed and reclaimed other than Rule 37. This will be a case where A has received supply of goods pertaining Jan 25 in the month of May 25, and hence the ITC what is claimed and reversed in January has been reclaimed in May 25. Then the reporting will be as follows. Original claim will be in your 6B. This is clear. Reversal will happen in 7H because this is other than Rule 37 and 37A. So my reversal will happen in 7H, and I will not report the reclaim amount in table 8C. Where will I report it? I will mention the reclaim in 13 itself because this is other than Rule 37 and 37A. So once I report it in Rule 30 in table 13 in current year, I will report this reclaim in 6A1 in the next year. Okay, so you see the contrast between the previous example and this. Previous also it is availed, reversed and reclaimed. Here also it's availed, reversed and reclaimed in the next year. But here if it is for Rule 37, I will disclose in 13 and 6A1. In the previous example, I will not disclose in 13 and 6A1, but I will disclose it directly in 6H in the next year. Now 8C, which is the important table, what does it contain? It contains the data of ITC of the current year, right? And it contains the data of ITC of current financial year, which is availed in the next financial year. Basically, 8C is data of current financial year, which is claimed in the next financial year. It shall not include ITC, which was claimed in 4A of 3B and reversed, because here you will not mention the availed and reversed and which you're reclaiming in next year. That will not come under 8C at all. So let's take an example. ITC pertaining to 24-25, which is part of GSTR 2B and it is auto-populated in 8A, but which has not been claimed by the recipient in 24-25, and hence he is availing the corresponding ITC first time in 4A5 in the next year. That will get reported under 8C because it's a first time reporting. Second instance will be a supplier. The supplies pertaining to 24-25, however, supplier has not reported the invoice in one, and he's reporting in one in April 25 to October 25, but it will appear, right? Hence, recipient is availing the corresponding ITC first time in 4A5 in next year. That will come in 8C because the data in 8A, which is coming in your GSTR 2B, is based on the invoice dates. Even if the invoice date is reported in next year, that will still come in your GSTR 2B in the current year. So that's the main reason that your 2B is there in your 8A for the invoices of 24-25, and which is claimed in this year and which is claimed in next year. Which is claimed in this year will be coming in 6B, which is claimed in the subsequent year will come in your table 8C. So the example for that will be Mr. A has purchased the goods in the month of January. He has missed to claim it in January. He is neither claimed nor reversed. Now he is claiming it in the next year. So this will come or not come. This will definitely come. The ITC is pertaining to 24-25, which has been claimed first time in the next year. So it will be reported in the 8C and 13 of 9. So how will the reporting happen? No reporting in 6B because I'm not claiming it this year. So definitely no reverser also. I will not report in 6 and 7 for 24-25. I will report it in 8C of 24-25 because 8A will have that detail and I will tell that this I will claim it next year, and I will report it in 13 also because credits which is claimed next year other than rule 37-37A will come under 13. Once I report in 13, I will claim it in 6A1 in the next year. So next year's 25-26, 6A will have the total credits which is claimed in my 3B that will get lodged there, and 6A1 will be the credit of this year which I'm claiming in the next year. Okay. Now, ITC claimed first time in the next year also, wherein A has purchased goods. He has not claimed it in this year itself, but he's claiming it in the next year. This will also have a similar reporting. No reporting in 6B and 7H in the current year. Report it as 8C because from the total 2B credit, I'm pushing it to the next year's claim, and I will report it in 13 and 6A1 in the next financial year. Now, ITC and reversal other than Rule 37 and 37A. Mr. A has claimed the ITC in March and he has reversed the same in March because the goods have not received. So you see the contrast between this example when it is Rule 37 and when it is not Rule 37. This is other than Rule 37, 37A. Now he is claiming it in the April 25. So the reclaim should be reported in table 13 only and not table 8C. Why? The original claim, I will report it in 6B because in this year's 3B, I have claimed it. I will reverse it in 7H because I have not satisfied all the conditions of section 16, so reverse it. Now, should I report it in 8C? No, because already it is come in 6B, which will flow in my 8B. So if they can be either 8B or 8C. Now 6B will flow to 8B. So I don't have to report in 8C again. So I will not report it in 8C, but I will report it in 13 because the credit of this year, I'm claiming it next year. I will report it in 13 and report it in 6A1 of the next year. So in the 6A1 of the next year, when I report it, I'm saying that in the total 3B, what I've claimed the credit, this credit was pertaining to previous year. So with this, what is giving us a clarity this year's return is that any credit next year which we claim or next year which we reclaim, we can always say that original invoice was pertaining to previous year and now I am reclaiming it for other than 37-37A in 6A1, and if it is for rule 37 and 37A, I will claim it under 6H. So that is the biggest difference between the previous returns and this year's return. Now 8H1, we have discussed a lot on 8C and 8A1. Now we'll go to 8H1, which says that IGST credit which is availed on import of goods. So in 24-25, the total IGST I paid on my imports is 100 rupees, out of which I've availed 80 rupees in 24-25. And balance I'm claiming it in next year. So 100 minus 80, 20 would always be a difference for which we will have a reconciliation. Now you have a column specifically for that. In table 8G, the entire credit of 100 will be reported. In 6E, I will report 80 because in my monthly returns, I've claimed only 80. And 20, what I'm claiming next year, I will report it in 8H1 so that there is no difference in my 8I column. Okay, so this is the various methods of, or the right method of claiming the credit in your 6, 7 and table 8 columns. So what's the summary? It's basically 4 and 5 is your outward supplies. 5, 6 and 7 is your ITC. ITC and services can be clubbed under inputs. 6A1 is a new insertion, which is previous year's credit, which you have claimed here in the current year. And in 8A also, 8H becomes a 8C becomes a very important column, whether you should mention or no. Based on the case studies, you would have realized it now that some credits you will mention in 8C, some in 13. If you mention in 13, you will report it again in 6A1 of the next year. And 9, 10, 11, and up till 14 is all mandatory columns. 12 and 13 is optional. 15 to 18 is again optional. 17 on outward supply is mandatory, but on inward supply is optional. Okay, can we take questions now?
Thank you, sir, for the very insightful and detailed session. Let's move on to the next segment. There are a few questions already. I'll ask them. In column 6A1, do we have to declare ITC of 23-24 availed in 24-25 since it appeared in GST 2B of 24-25?
So, since from the
23-24
case,
availed in 24-25 appeared in 2B of 24-25.
yes, you will have to report 23-24's credit in 6A1 if it is, because this year there is no like this year you have clarity of whether it is rule 37 and 37A. Last year you didn't have that clarity in the form itself. So last year's credit, if you have claimed in current year's 3B, then you will have to declare it under 6A1.
Okay. Next one, how to show input tax credit pertaining to financial year 23-24 amounts to 2072, which was earlier reported in table 13 of GSTR 9 of 23-24, has been reclaimed in 24-25 and disclosed in current year's GSTR 9 ITC of 2072, has been re-availed, and 1780 has been shown as permanent reversal, resulting in net ITC availed of 292 during the year 24-25.
Okay. So your gross reporting, what you're reclaiming now, due to rule 37 and 37A, you will have to report it in 6H. And your reversal, which you have done in the current year, you will do the reversal in 7 so that your net impact will be the same.
Will ITC, as per credit notes appearing to be, will be netted off in column 8A?
No, 8A will be gross. It will, 8A will be ITC as per GSTR 2B, which will be before credit notes, because 8A, you don't have an option of credit notes there. So it will be gross amount itself. It will not be net of credit notes. Your reversals are coming in 7. So, no. The instructions on 8A says that table 3 thereof, which is coming in GSTR 2B. So your table 2B will be net of credit notes. Yes, it will be net of credit notes.
Okay. Should ITC as per 8C and 13 be equal?
Not necessarily always. 13 will be in cases of other than rule 37, 37A. So 8C will not in all cases be equal to 13.
I have multiple GST numbers in different states. My total turnover of all the GST put together crosses 2 crores, but individual state wise is less than 2 crores. Is annual return applicable?
Very good question. So the aggregate turnover is to be considered to see the limit whether you have to file 9 or not. So you have to see the aggregate turnover, which is the turnover for the PAN across all the states. So if your aggregate turnover all over India crosses 2 crores, even in one state, if your turnover is below 2 crores, you will have to file returns in all the states.
Next question. Can demand be raised based on HSN code reported in column 17 if reported wrongly?
Technically, no, but the officer will raise this because they will have to raise some issues. So they will tell that that is one of the issues, but you can definitely challenge it saying that HSN is not a correct way to determine whether there is a supply. You have to prove whether it is a supply or no, and just mentioning the HSN summary in a table in 9 cannot be the basis to levy demand, but there will be equal kind of questioning from their end also. So be prepared, but definitely legally this is not a correct thing.
Okay, full amount of previous year reversed, reclaimed, but part amount moved to ineligible. How do you show this?
Okay, how is it gone to ineligible this year? So last year you have claimed and reversed, this year you have reclaimed it. As soon as you reclaim it, you will either show under 6H or you will show under 6A1. So if you are claimed under 6A1, there is no question of reversal because it gets excluded at the threshold itself. But if you're claiming it under 6H, then the corresponding reversal you can show it under 7.
Yes. Next question. What is the basis of preparation of GSTR 9? Will it be books or returns? There is a major confusion and controversy as the point determines a lot of issue.
Controversy continues. So you will have to take a stand, but the FAQs and the guidelines which is given and the various press notes which has been released till now clearly shows that the GSTR 9 is a statement of the returns what you have filed, proving that whatever you have done in the returns, whether it is correct or no. And you have 9C, which is actually the reconciliation of your books versus return. So 9 is not a reconciliation versus books and returns. So it's a reproduction or a correct presentation of what we have filed in 9. The reconciliation is there in 9C.
Next question. Reclaimed amount has been reported in table 6A1 since a portion of amount is ineligible. The difference is appearing in table 7J.
Okay. So you have excluded in 6A1. So it will not flow to your 6B. Okay. So if it is not flowing in your 6B, then your reversals cannot be reported because you're saying that the credit of previous year, you're claiming it in your current year's 3B. So there should not be any difference because 6A1 excludes that ITC column, the ITC of previous year completely.
Okay, so the next question, should the HSN wise outward supply match with the net outward supplies reported under B2B and B2C, or should they match the gross outward supplies?
They should match the net outward supplies, your gross minus your credit notes, debit notes, everything, and it should ideally match with your column in 5N because 5N will exclude your reverse charge also. So your HSN should ideally match with column number 5N, table 5N.
Next question. There is a debit note in financial year 24-25 as per books, which is not reflecting in 2B, but the same was reversed in financial year 25-26 by reducing the input in 25-26 3B filing. How do I report this in GSTR 9?
The question is not clear whether it is outward supply or an inward supply.
I think it's outward, sir, because later. I'll repeat the question, sir. There is a debit note in financial year 24-25 as per books, which is not reflecting in 2B, but the same was reversed in financial year 25-26 returns by reducing the input in 25-26 3B filing. How do I show this in 9?
Okay, so it is a question on input because he's saying on 2B. Yeah. So he is saying that the supplier has raised a debit note and you have claimed it. Okay. Or it's there in the books, but you have not claimed it. So the facts are not clear. Let's make some assumption saying that it is there in the 2B and you have claimed it. But in the books, you are claiming it in the return in the next year. Correct. And you have reversed it. So your matching of 3B, so there'll be definitely a difference in your GSTR 9C. In your 9, you can match it saying that what is the credit you have claimed in your 3B and give the breakup correctly under 6. Then your difference in 9 will get elevated.
Question: what is included in 6B? Is ITC of 2425 availed in 3B or ITC of 2425 without any regards to availment in 3B or entire table 4 of 3B? 4A of 3B.
The total 4A of 3B has to come in your 6B, but you should restrict it to what you have claimed in your GSTR 3B. If you are claiming more than what is there in your GSTR 3B, which means that you have more credit, but you have claimed less in your returns. So you are in a situation of helplessness. The officer cannot give you that credit. In fact, he will then start raising question that you were supposed to claim more credit, but you have not claimed the credit. So that will be a additional question being questioned by the officer.
24-25 turnover, we have to declare in 25-26. So in which table are we required to show this?
24-25 turnover, declaring it 25-26. So you have specific tables, which is 10 and 11. So 10 is the relevant table which you have to disclose it here.
If I have shown any advance amount while filing at GSTR 3B and reversed in next month at 3B, whether we have to show this in 9 or not?
We should not show the advance. You should just show the invoice which is raised, because it's the advance which is adjusted in the subsequent month's return.
Next question. Can we show GST excess paid in table 9? Tax payable is lesser than tax paid.
You can show it, no problem.
Okay, last.
But you will not get a refund just by disclosing it over here. If you have paid taxes in excess than what it is payable, you have to apply for the refund claim, and then you will get the refund. Just by disclosing in the 9, you cannot you cannot wait for the officer to come and give you a refund, because refund claim has to be lodged. You have to file a refund claim under section 54, and just by disclosing it in 9, you will not get any refund.
Okay, so one last question. If I am having e-commerce business GSTIN and also having a regular GSTIN, and my turnover for regular GSTIN is 1.5 crores and for e-commerce is crossing 2 crores, is 9 and 9C applicable?
So your total turnover is your aggregate turnover, which is 1.5 crores plus 2 crores, which is 3.5 crores. So you have to file 9 for both the GSTs. 9C is not compulsory because you have not crossed the threshold of 5 crores.
Yes, with that we've covered all the questions. Thank you, sir, for answering all of them. And I thank the participants for making this an engaging session. And now I hand over this session to our chairman, Harsha, sir.
Thank you, Deepak sir, and thank you, Shreya. Before we move on to vote of thanks, I just have a quick 2 announcements to make. So one is regarding the webinar session. Registrations are now open for our upcoming webinar on Digital Personal Data Protection Act 2023, scheduled on 15th of December, organized by Corporate and Allied Laws Committee. We invite all participants to register and benefit from this important session, since it is one of the crucial things to manage and repercussions are very stringent. It cannot be neglected at all. The second announcement is KSCAA is a co-host to the 28th All India Federation of Tax Practitioners, which is AFTP, National Convention scheduled on 13th and 14th of December at Tennis Pavilion at the Palace Grounds, Bangalore. Request all members to register and get benefited from the events. And coming to the vote of thanks, on behalf of KSCAA, I extend our heartfelt gratitude to CA Deepak Kothari sir for delivering such a comprehensive and practical session on 9. And tomorrow, Vinay Karthik sir will be handling GSTR 9C. The same Zoom link will work. Your insights and clarity have truly helped our members and participants navigate the complexities of annual GST compliance. A special thanks to all our participants for joining us in this evening for our active involvement and throughout the webinar. There were small glitches, but then it was all covered in the question and answers, and each and every participants were active till the end, even though there were glitches. That was how interesting the session was, Deepak sir. We look forward to your participation, all the participants in our future programs. Please stay updated on our KSCA website for more event registrations. Thank you again, sir. Thank you, Shreya.
Thank you. Thank you very much.